And I believe the recording is on. Can you confirm if you received the message?
Yes.
Yes, it's on.
Yes, it works.
Yes, yes.
Perfect, thank you. Okay, so once again, welcome everyone. The recording is on. As I said, at the beginning of this session, there will be a psychological talk by John. We'll talk about something like the trading plan, something like risk management on an FTMO account, funded accounts. And after the psychological talk, I will host the usual tab analysis session where I will break down the higher time frame price action. I will break down the lower time frame price action. I will break down everything around the chart, the actual price action. And I will talk about the expectations that we can expect on this week. So yeah, if you're ready, John, you can start the session. But I believe, do you need screen sharing or?
I don't need it. If you can do me a favor, just type yes or no onto your screen, and the guys, we have to circle some things.
Okay. First of all, I will change the color to black if that's good. No, don't circle it because that will be messy. So instead of circling it, here will be the yes. Here will be a little box that you can create an X in, and here will be a no with a box. This isn't a nice box. This no. No. Okay, that's a perfect box.
That's a perfect box. Yeah.
Sorry, I have OCD. So if you're ready, just start it, John, please.
Okay, guys. So please, I ask you to circle yes or no if you have a trading plan or you haven't. Everyone, please just use the annotate tools and yeah. Yeah, I ask this because I saw a lot of you don't have a plan, and it's important to have a trading plan, guys. We have a trading plan planner tool in our resources channel, and it's so important because trading with a plan makes it much easier, guys. I didn't have a plan back into my old trading days, and I just blew at least 10 challenges because I traded without a plan. But when you have a plan, you will do it good. Don't stress. Okay, man. Okay. Yeah, that's cool. So trading plan is important, guys. If you don't have one, please just create a trading plan and backtest it. Backtest it on a demo account, forward test, or paper trading on TradingView. But you have your test your plan, and if it works, you can put it into a funded account or into a live account. But you need a trading plan, because without a plan, trading is just gambling, you know.
And sorry for interrupting. There's a good quote for this. If you don't plan, I mean, if you fail to plan, then you plan to fail. Right? This is the perfect quote for this, because you have to create a trading plan, because without a trading plan, you'll be lost in the markets. And that's what we always talk about, because it's so fucking important.
Yes, it's so fucking important. The other thing is risk management, guys. I got a lot of messages from you about how much risk should you use in a challenge, or in a personal account, or live account, or funded account. And some of you guys said you use 1% risk on a challenge account, and oh my God, that's too much. That's too much. You can't maintain the account in the long term, even if it's a funded account. You can't maintain in the long term, because 1% is really huge. You got 5 losses a day and your account is blown. So I suggested all of you to start with 0.25. That's more than enough for a challenge or a funded account for start. And I suggested another thing, that your first trade in your challenge or your funded account, your very first trade, just close at 1 to 5. Don't let it run till it comes back to B or lose. Just close to 1 to 5, secure some profits, and you will gain more confidence. And yeah, and there's a chance after you reach at least 5% of profits, you can increase your risk to 0.5%, but it's not needed. If you're comfortable with 0.25, you can go with that. The same scenario is okay with a personal account. You trade with 0.5% risk, and if you reach some profits, you can increase your risk to 1%. But this is just for personal accounts. And the other thing that you guys told me, you are afraid of entering a trade. One reason is because of risk, and the other reason is because you didn't backtest enough, didn't practice the strategy. You have to do more backtesting, guys, making case studies. There are webinars how to make case studies, how to backtest. So please, guys, just watch these videos.
Can I say something about this? Just real quick.
Yes.
So you talked about that it's really important to actually, well, don't be afraid to execute the trade. And indeed, it's really, really important. But the way you can learn how to not be afraid from executing a trade is by playing your edge. And that's why John said that you have to create a trading plan, because basically a trading plan, if you have a trading plan, that means you have an edge. If you have an edge, you have to execute that edge, because if your edge appears in the markets, for example, you have an edge, you have a plan for a change of character entry, and full change of character entry happens, that means your edge has appeared on the market. And if you execute your edge, then you're trading your whole plan, you're trading your whole edge. And if that hits stop loss, that won't be a problem. That won't be even a problem, because you're trading your edge. And by trading your edge and by actually tracking the statistics around your edge, that, for example, one trade was stop loss, one trade was TP, one trade was break even, and making statistics about these TPs, stop losses, break evens will actually improve your edge, because you'll see what's your mistake, what your mistakes are, how can you improve in your trading plan. Because if you keep making these mistakes, if you keep making the same mistakes over and over again, you'll notice a pattern. You'll notice a pattern in your edge. You'll notice a pattern in your edge. You'll notice a mistake pattern in your edge. And if you notice a pattern, you'll be able to actually execute that pattern and fully kill it from your trading plan, fully kill it from your edge. And by refining it over time, by just simply making statistics around your plan, around your edge, will improve your trading plan, will improve your trading, improve your trading. Just trust me. That's why you have to create a plan. That's why you have to create an edge that you can simply execute. Whenever your edge appears, you can execute that edge. And as I said, it doesn't really matter if it hits stop loss. Of course, I do hit stop losses. I hit loads of stop losses, but those stop losses are inside of my edge. And by simply hitting those stop losses and knowing the fact that those trades were perfectly fine according to my edge, according to my plan, I can just backtest those trades. If I backtest those trades, I know this is my mistake. That's what I always do. And if I know these my mistakes, then I be able to learn from those mistakes. So yeah, please just continue, John.
Yes, guys. So that's really
important question. Is there a trading plan template available? Yeah, there's a trading plan template available in the resources channel. So please, guys, just check the resources channel. There's the criteria tracker. There's a trading plan planner. We have a whole trading plan planner file that what literally tells you how to create a trading plan.
Yes,
so
and we have a little trading plan inside of the PDF too. It's a basic trading plan, but you can use that.
That's a small trading plan which tells you how to actually prepare for a session, what to look for, how to create for example, pre-session analysis step by step. So you can implement all of these things together. You can put all of these things together into one complete trading plan of your own, because you have to create your own trading plan. There's no cheat sheet for this, because each individual is different, right? I'm different from John. I'm different from you, for example, and I need a different trading plan than you, because my needs are different than yours. Your needs are different than mine. So that's why you have to create your own personal trading plan to actually that fits your needs. So yeah, just continue, John.
Yes, exactly. So guys, please, who picked the no, please create a trading plan and do it today, create it today, because it's the key term of in the long term. It's a key. If you have a plan, guys, just follow the plan no matter what. As Marcel said, if you got a stop loss, that's okay. If you got a break even, that's correct. If you got a winner, it's okay too. But just follow the plan, execute your plan, and you will be successful.
And another question here in the chat: what reason on real I fail with stop loss, on real account I fail with stop loss every time, and on demo account I success with TP? That's basically fear. That's motivated. That's motivated yes. by fear, because on the real account you're afraid to let the runners, the actual winning trades, run. You're afraid to set a runner, and you're afraid to actually let that trade hit TP. And on demo account, you don't really care because you're not trading with real money. So you're just letting your good trades run. You're booking more profit. But on real account, you're, for example, closing all of these trades because you're afraid of losing more money that you lost. But the thing is, you'll have lots of losses. You'll have literally lots of losses. But in this strategy, in this smart money concept strategy, in the supply and demand strategy, you are being able to make profit with, for example, 15% win rate or even 10% win rate. Because if you make a quick calculation for this, out of 5 trades, if you win 1 trade, that 1 trade hits 10 risk reward TP, and all of the 4 other trades that hit stop loss, that will be still 6 risk reward ratio for you. Or even if you hit 5 risk reward, because that's your minimum risk reward out of. So for example, you trade 5 trades. Out of the 5 trades, 4 will be loss, 1 will be win. This 1 trade is 1 to 5 risk reward ratio. These 4 trades were -1 risk reward ratio losses. And if you even calculate this by simply having, I don't know how much win rate is this, maybe 15%. So if you're having a 50% win rate, and if you're hitting 1 to 5 TP with only this trade, you're still in profit. You're still in 1% profit, because this 1 trade, this single 1 to 5 risk reward ratio trade, compensates all of the losses for these 4 losses. And this is really, really important, that you shouldn't be afraid of losses, because you lose a lot. For literally, guys, you will lose fucking a lot. But there's this strategy. That's why we are trading with this strategy. That's why we're only aiming for 1 to 5 risk reward trades, and that's our minimum. 1 to 5 is our minimum, because the 1 to 5 trades will compensate all of your losses. So if you're losing 4 in a row, with a 1 to 5 trade, you'll be able to compensate all of the losses with 1 single 1 to 5 risk reward ratio trade. And if you make more calculations, if you keep executing 1 to 5 trades over and over and over and over again, and if you keep executing 4 losses in a row, then the 5th trade is hitting 1 to 5 TP, you'll be still able to make consistent profit. Because, for example, if you execute 20 trades a month, and from those 20 trades, only 4 will hit TP, and 4 will hit TP for 1 to 5. That will be 20 risk reward, right? That will be 20 risk reward ratio. You will win 20 risk reward ratio. And all of the 16 other trades will be losses. That will be -16 risk reward ratio, and you're still in 4 risk reward ratio profit. You're still in 4% profit with, I don't know, maybe 15% win rate. That's why it's really, really important to keep executing your edge. You shouldn't be caring about the losses, because losses are part of the game. You have to lose. You have to lose in order to win. You'll make loads of losses. Just trust me, you'll make loads of losses, but it's perfectly fine. Yes, because if you keep executing your edge.
Yeah? Yes, guys, you will make a lot of losses. I suggest that when you make a loss, save it on TradingView, make a screenshot of it, and after the session, you should backtest your loss. And after session, no stress, no trading with real money, and you can see what was your problem, what was your mistake, and you can analyze that, and you will learn from all of your losses if you do this every day.
Exactly.
Yes.
That's what's very difficult to keep your confidence when you're yeah, that's why I've recommended the book Chimp Paradox. So for all of you guys, please just read the book Chin Paradox, because that will teach you how to actually deal with your emotions, how to deal with your ego, how to deal with your emotions, how to kill your emotions and let your brain actually work and not your emotions. And this is really, it's not really related to trading. So it is not a trading related book. It's a psychological related book, but just simply learning the things that you can read in the book will help you in trading, because that book helps you how to keep your brain functional and how to keep your emotions and how to think with your brain and not with your emotions. And in trading, you have to think with your brain, right? If you're thinking with your emotions in trading, you'll be dead, you'll be lost, and you'll lose money, because in trading, you can't have emotions. I mean, you can have, because of course you can't fully kill all of your emotions. I still have emotions. Of course, I still fear of losses sometimes, but I know that my brain is stronger and I know that I will have to keep executing my edge. And if I hit a stop loss, I will be just looking for another trade. Just like yesterday, or I don't know which day, on Monday. Yeah, that was on Monday when I took a loss, and that was a fine loss. I made a mistake by that loss, but I wasn't worried. I didn't really care about that loss. John opened the same loss too. We opened the loss together. And after that, we were looking for another opportunity. And another opportunity showed up, and that was a 1 to 7.5 risk-reward ratio trade. And that's it. My loss or losses have been compensated by the 1 to 5.7 risk-reward ratio trade. So that's all. That's why you have to keep executing your edge and kill your emotions. And once again, you won't be able to kill your emotions fully. But please do me a favor and read that book.
Yes, guys. And if you have a losing streak, let's say you have 5 or 6 losses in a row, just take a break, 1 or 2 days, clear your mind and return then. But if you feel you are depressed and you're bad, or you feel you don't even know how to trade or so, if you have the same feelings that I said now, you just have to skip 1 or 2 days and clear your mind. That works.
And what Ramona said, it takes time to deal with losses without emotions. In my opinion, it's more important to them. Yeah. It takes time. It will take lots of time. Just trust me. I'm trading more than 2 years now, and I still have emotions. I still can't fully kill my emotions, but I've learned how to control my emotions, and that's the key part. If you learn how to control your emotions and how to actually make your brain more functional, you will be successful in trading, because your brain will be stronger than your emotions, and you'll be able to think with your brain and not with your emotions. And that's what this book for. So basically, this book talks about these things, and it's really, really important for you to read this book, because after you've read this book, you'll be able to deal with your emotions. If you practice those things that this book said. So yeah, and actually, we have few people in this membership who have already read this book and already profited from this book, because I recommended this book for some of you guys, and they weren't profitable. They were making consistent losses because they were fear of losses and couldn't open more trades and FOMOing, etc. And I recommended this book for them. And now they are making consistent profits because they've learned how to actually deal with your emotions and how to make their brain functional the most of the times.
Yes, guys. And another thing, losses are in the short term is nothing. You want to profitable in the long term and not just in the short term. So when you take a few losses, it's just nothing. You can learn from it. The main thing is to be profitable and consistent for the long term. That's the key, guys.
And these books, it's available in all languages. I've read it on Hungarian language, of course, and I believe it has been pinned on the resources channel, but I will pin it one more time for you guys. So I believe that's enough for the psychological talk. Let's just start the technical part, because we are lack of time. It's almost 2:30, and we have to start the technical part because the session opens in 30 minutes. So let's just start. Okay, on the 4-hour chart. As I sent you in the markups yesterday, I was expecting a reaction on this upper supply zone right here. So let me just change back the color to yellow, because that's our color. Perfect. So I was expecting a reaction on this supply zone up here on the 4-hour chart. Please, if you don't know what I'm talking about, just take a look at yesterday's markups and you'll be able to understand what I'm talking about. So I was expecting a reaction on this supply zone up here. And I was expecting a break of this supply zone down here. So this was the decisional supply zone that has caused the last recent inefficient push to the downside. And as I said in the markups, I believe on last week, I was expecting a break of this supply zone and I was expecting a tap of this upper supply zone. And seems like price is reacted on a 5-minute supply zone here that has been marked in the markups yesterday also, or I believe in the updates. I don't really know where did I mark it, but I marked this supply zone up here that I said price has a chance to reverse on the supply zone and tap deeper demand areas. And after a deeper demand area tap, we'll be able to continue the upside trend to this supply zone. So breaking all of the movements down, breaking all of the movements that we can see on the chart down is basically this situation right here is pretty simple. This was a weekly low point. This was a weekly low point right here. This blue line is the last point of the weekly low point. The price couldn't break below, as you can see, so it couldn't create a weekly break of structure. As I said in the previous sessions, if price can create a weekly break of structure, then it will has to create an upside movement to collect more liquidity and to tap into some sort of supply zone. And if these movements can happen, so the upside movement and the liquidity collection movement can happen, then price can create another attempt to actually break below this weekly low point. And the next recent supply zone that we care about is this one up here. This is the next recent supply zone that we care about, because with this amount of liquidity that's literally resting below this supply zone, price will be able to break below this weekly low point. So there are two scenarios for the weekly low point break. I'm just talking about the weekly low point break and not about the supply scenarios. So two scenarios for the weekly low point break. If price can reach this supply zone, I mean, there are actually three scenarios. So the three scenarios are, first, if price can reach this supply zone and create a change of character on this supply zone, then price will be able to try to break below this weekly low point. If price can break below this weekly low point after hitting this supply zone, and it reverses once again on this weekly low point, and it's not strong enough to break below it, then we'll see a much higher supply mitigation somewhere around here. Somewhere around here. Where's the liquidity? There's the liquidity. There's the liquidity. So we'll see a much higher supply mitigation. Once again, if price can't break below this weekly low point after this supply is being mitigated. So price comes up, comes down, can't break below this low point, then we'll see a much higher pullback to some higher supply region because it has to collect more orders in the form of these order blocks and liquidity. That's the first scenario. Second scenario. I mean, inside of this first scenario, we have more scenarios. If price can break below this low point, this weekly low point, after hitting this supply zone here. So if price creates a pullback here, here's the supply zone up here, creates a change of character. And after the supply mitigation and the liquidity sweeping movement right here, it can break below this weekly low point. Then we'll see a much higher pullback to some higher supply region. Because if a weekly low point breaks, then we can expect a weekly pullback. And this, if you take a closer look, I mean, not closer look, zoomed out look. This was our weekly low point, right? Okay, let me just switch to the weekly chart. So this was our weekly low point right here. That was the last recent weekly low point. This isn't a low point because it couldn't break structure here to the upside. So this is between this low point and this high point. This is just substructure. But if price can break below this low point and it can create a break of structure right here to the downside, then the overall, let me just remove these yellow things from here. Okay, never mind. So if price can break below this low point, then the overall structure will be continued, because if you take a look at the weekly chart, it's following a bearish pattern. And what price usually does in the bearish pattern? It's creating break of structures, pullbacks, break of structures, pullbacks, right? And as you can see, this was the last recent leg of the weekly bearish movement. This is the last recent leg. And if this last recent leg can break below here and create a break of structure to the downside, we can expect a much higher pullback, because after a break of structure, we can expect a pullback to some higher supply region, another break of structure, pullback to some higher supply region, another break of structure. This is how market moves. And once again, if price can break below this low point, then we can expect a higher pullback. So if price breaks below this low point, I believe the trend will turn into bullish pretty soon, and we'll be able to execute long trades to the upside. But this is really far away from now. This is far away. Now all we have to focus on is this 4-hour region. But we have to know the higher time frame perspective. Of course, we have to know the higher time frame perspective. That's why I'm talking about the higher time frame. because without the higher time frame, the lower time frame will be actually a noise. So without the weekly chart, the 4-hour chart can be a noise. If you don't follow the weekly or the daily chart, the lower time frame of the weekly chart is the 4-hour chart. So without the higher time frame of the 4-hour chart, it will be a noise. But right now that we know that price is inside of a weekly demand zone, weekly low point right here, we know that we have several options. Several options, if that price breaks below this low point, then we'll have a pullback. Second option, if that price can break below this low point and higher pullback to some supply region somewhere around here. These are the options, but we have several options for the 4-hour chart too, as I said. Several options is the first option, as I said, the top of the supply zone, mitigation of the supply zone, downside movement, break. But if price doesn't come up to mitigate this supply zone, and instead of mitigating this supply zone, it taps this demand zone and breaks below this demand zone, so creates a break of this demand zone, then it proves that price has collected enough liquidity from this region and enough liquidity, enough orders from this order block. So if price breaks below this demand zone, then we can expect two scenarios once again. The two scenarios will be different from the previous scenarios, because the first scenario is if price can break below this demand zone and can create a break of structure here to the downside and can create a weekly low break, then we'll see not a much higher pullback, but we'll see a pullback to this supply zone. Because if price can't break below this low point, this weekly low point, then it has to collect more liquidity. Where's the next liquidity area? There's the next liquidity area. If price collects this liquidity, there will be a reversal for, that's 100% that if price collects all of this liquidity from this region, sweeps all of this liquidity to the upside, then there will be a reversal. That's literally 100%, because that's how liquidity works. That's how the stop losses works. If stop losses are being hit, new orders will be placed into the market. So first scenario, inside of the second option, if price can break below this low point, then upside pullback will happen, this supply will be tapped, and the same scenario will be live as in the first option. So after this, as I said in the first option, if price can break below this, then we'll have a much higher pullback. If price can break below this, then we'll have a higher pullback, but not a much higher pullback. So these scenarios are combined together. Second scenario inside of the second option. So this is the second option. If price can react on this demand zone and breaks below this demand zone, and it can break below this weekly low point, then we'll have the same scenario again, that price will create a higher pullback because we are following the weekly structure, and after a weekly break of structure, we have a weekly pullback to some higher supply region. That's how things work. So basically, these are options here, and we have some not really valuable and not really probable options that price will break below this high point and continue the upside movement. I believe this won't happen. Either price will react on this supply zone, or either price will react on the weekly low point. Before breaking above this supply zone, I believe price will create a second attempt to break below this low point, this weekly low point. So yeah, these are the probable scenarios for the which time frame 4-hour chart. And let me ask you guys if it was understandable for you. So everything is understandable, clear, easy to follow. Perfect. Let me just drink. I consider this supply as a part of the liquidity. Which supply, Nikita? This supply? You consider this supply as a part of the liquidity? Sorry, my bad. Let me just remove the drawings real quick. Draw it now, please. So you're saying that price has a chance to sweep this liquidity, right? We'll see. We'll see, because if you're following the actual order flow and following the, not just the order flow of the liquidity, if you're following the liquidity, this is a strong liquid region, and this is a higher time frame liquid region, and all you have to do is follow liquidity. If price sweeps this liquidity, and this is a strong, really strong 4-hour liquid region, and if price sweeps this strong 4-hour liquid region, there will be a reaction. The only reason, the only question right here is that sweep will be enough to reverse price to the downside and create a weekly low point or not. That's why I said that there will be several scenarios, because if price can't create a weekly low break after the reaction on the supply zone, then I believe price will come up to sweep this higher time frame liquidity right here, because this is liquidity. You're saying it, right? This is liquidity also. But I believe this liquidity will generate enough orders, will translate enough orders, all stop losses into new orders to actually create an impact here on the price. But we'll see. I believe this scenario is less probable than just actually creating a reversal on this supply zone, but there's still a chance. And yeah, thank you for sharing your opinion. it was like a range. Yeah, could be a range. We'll see. At the end of the day, might be you'll be right. So yeah, everything can happen. But I'm expecting this scenario. I'm expecting the tap of the supply zone and reverse on the supply zone, but we'll see. Okay, so that's all about the 4-hour chart. That's all about the 4-hour chart. Yeah, we marked every single probable region. We have this demand zone marked out, which I will extend because, yeah, we have every single zone marked up on the 4-hour chart. So let's just switch to the 15-minute chart. Okay, this supply zone here was marked yesterday, that this supply has a chance to give a reaction. And as you can see, these zones are working perfectly. So basically, I marked this zone yesterday that when price was somewhere around here, that we can expect a reaction on the supply zone. And as you can see, price reacted on the supply zone perfectly because there were the orders were resting on this supply zone. This is a 5-minute supply zone actually. That this supply zone has started the 5-minute character changing movement to the downside, and this supply zone had liquidity just below it, as you can see. And of course, this supply zone is part of the 4-hour liquidity region, but now price has just created more liquidity. As you can see, this 4 tap, or I don't know which tap is this, it has created more liquidity for the upper supply area. But it was still being able to reverse price to the downside. So what can we see on the 15-minute chart actually? We can see that price has created a huge bullish pressure to the upside yesterday, right here at this region, as you can see, broke above the decisional supply zone. This was the decisional 4-hour supply zone. So it broke above this decisional supply zone, created another bullish pressure right here at the flip zone, as you can see. And yesterday, New York session was a rangy session. So during yesterday's New York session, price was just ranging. And after New York session has ended in Asian session, as you can see, in Asian session, prices created a liquidity sweeping movement to the upside because there was liquidity on the upside. First tap, second tap, third tap, fourth tap. This is liquidity, and price has just fed this liquidity into this supply zone. And after sweeping the liquidity into this supply zone, price has just immediately reversed and created a 15-minute change of character right here, which was the weak change of character. But right after the weak change of character, price has created a strong change of character right here also. So meaning this is counter-trend movement. Basically executing short trades right here, right here at this region were counter-trend movements. But now the price change character on the 15-minute chart with a strong change of character on several structural places, as you can see, and even this less recent flip zone, it has changed character because this was the less recent flip zone for us that has flipped the 4-hour supply zone, and price exchange character on the 15-minute flip zone too. We can safely execute short trades down to this demand zone because I believe on the 15-minute chart that's the most probable scenario that price will create a bearish pressure down to this demand zone, and after this demand tap, price will create a change of character to the upside, and we'll be able to continue to execute the long trades up to this higher time frame supply zone, which has liquidity just below it, as you remember. So, but slowing it down and explaining all the scenarios that we have here, is price has created several supply zones for us. For example, we have the first extreme supply zone, which is this one right here, as you can see. This is our first supply zone that has caused the first change of character to the downside. This is our first 15-minute supply zone. Can you mark the second supply zone below this supply zone, please? Anyone? Yeah, thank you. That's the one. Please remove your drawings. Thank you. And I believe Seb is marked it right, that this supply zone is the decisional supply zone. But this supply zone is heavily part of the liquidity, as you can see. Here's perfect liquidity. And why is it a liquidity? It's a liquidity because time has passed between the first tap and the second tap. So these aren't 4, 5, 6, 7, 8, 7, 9 equal candles. Sorry, I can't count. So these aren't several equal candles next to each other. Time has passed by between the first tap and the second tap. So here's the first tap, price action region, second tap, price action region. So this is liquidity. This can be considered as double tap for the upper supply region. But still, if price can create a change of character here on this supply zone, then we'll still be able to trade the shorts down to the demand zone. Because let me explain why. Price doesn't have to necessarily sweep this liquidity to the upside before continuing the shorts to the downside, because this liquidity could be actually a fuel for the longs. Because if price can reverse on this supply zone and create a change of character on this supply zone, then this liquidity won't be needed to actually reverse price because price is actually because price is already reversed. So if price reverses on this supply zone and create a good entry criteria, for example, with 1 minute liquidity for the supply zone, for the character changing supply zone, then you will be able to enter in this trade, and you will be able to enter and target this demand zone down here. Because if this scenario happens, then this liquidity right here, this liquidity on the upside will be fuel for the longs. So this will be liquidity for the upcoming longs, because this liquidity will fuel the upcoming longs to the upside. So that's why I said it's really, really important to understand liquidity. Was that future million? That's a demand zone, of course, but more likely these demand zones are being broken. I've explained this scenario in the webinar, in the past webinar, that if this kind of 15-minute candle is being printed on a chart, then it has a really, really high chance to break. So I believe this will be liquidity for the deeper 4-hour demand region. Please just check that webinar. So where was I? Yeah. So if price can create a breakout structure here to the downside from this movement, there won't be a new supply zone. If price can create a breakout structure here to the downside, there won't be a new supply zone. And if price reacts on this demand zone, because right here, a demand region has formed. Somewhere around here, a 5 minute / 1 minute demand region has formed, because as you can see, price has created a slight change of character and liquidity sweeping movement right here to the upside, meaning there's somewhere around here is a demand zone. So if price can create a break of this demand zone and it just reverses on this demand zone, then we'll be able to target this supply zone up here with longs. But this will be more clear on the 5 minute and 1 minute chart, and you'll see it better on the 5 minute and 1 minute. So if this happens, we'll be able to target this supply zone with longs. And if this supply zone is being hit, then we have several scenarios. The first scenario, as I said, if price changes character and creates a good entry criteria for us, somewhere around here, then we'll be entering a short trade and target this demand zone down here. Second scenario, if price taps the supply zone, creates a break, creates a sweep, then after the tap of this higher supply zone, we'll be able to target the demand zone with shorts after, of course, the change of character and good entry criteria right here at this region. So these are the two possible scenarios for the reversal on this demand zone down here. Two possible scenarios we have still for the break of this demand zone. First, break of this demand zone, continuation, of course, with the good entry criteria right here, entry criteria, and targeting this demand zone down here. And actually, that's the only scenario, because if this demand zone will be broken, I believe price won't just reverse to the upside, then it will be continue the movement to the downside, just simply then reversing to the upside. So that's all about the 15-minute chart. It will be much cleaner on the 5-minute chart. Is it still understandable? Can you easily follow me? Perfect, thank you. Stop. Just remember it, guys. Okay. Why is it the demand zone? Remove it, Tamás. Why is it a demand zone? It's a demand zone because, as you can see, price has created a tap of this less recent flip zone, 15-minute flip zone. Here was the top of the flip zone. Flip this zone, and after a flip, it has changed character on several places on the 5-minute chart, meaning that there will be a demand zone on the 5-minute or the 1-minute chart. As you can see, price has tapped this demand zone, and it will be much cleaner on the 1-minute chart. And the 1-minute demand zone has not been mitigated yet, as you can see, because this is the 1-minute demand zone, and it has not been mitigated yet. But basically, this demand zone was partly mitigated. You can consider this as a demand zone because here's liquidity above it, and price has just swapped the liquidity into this demand zone and reverse the upside. But I believe this demand zone won't hold, so we have a higher chance to see the mitigation of this downward demand zone. Okay, but that's the 1-minute chart. Let me switch back to the 5-minute chart. So the 5-minute chart. As I said, we have two scenarios for this 5-minute chart. The first one is the tap of this demand zone, this 5-minute demand region, or the deeper demand region, reversal here, longs up to this supply zone, and after the supply is being hit, then we have more scenarios. The first scenario is that price creates a break of this zone, taps the higher supply zone, creates a change of character, and sweeps this liquidity right here, creates a change of character, downside movement. This is the first scenario. Second scenario, it changes character right here with a good entry criteria, continuation to the downside. So these are the scenarios that we can expect on this supply zone, and this is the first scenario that we can expect on this demand zone. The second scenario is the break of this zone, good entry criteria, and continuation to the downside. So it's really, really clear. It's really, really easy to read. And I know, guys, that lots of you guys are having trouble with creating the markups. Lots of you guys are having trouble with actually creating the pre-session analysis. And as I said several times, please just talk in yourself. Please just talk in yourself and create the same thing as I do. Just sit down in front of your monitor, create the whole analyzing session for yourself, and just talk through things, just like I do. Just say that here's a supply zone, and what scenarios can we expect on this supply zone? What scenarios can we expect on this demand zone? Yeah, here's another demand zone that I didn't see. But what new scenarios does it bring for us? What can we expect on the higher time frame? How can I combine the higher time frame with the lower time frame? And just do these things, please, because it's really, really important to create a pre-session narrative. As I said several times, as I'm saying it in every single pre-session session. It's really, 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 really important to create a narrative, because just watch the case study session. I've explained everything in the case study session, that why is it important, that how can you follow the actual pre-session markups analysis of your own. And please just watch the session if you haven't seen it already. And I will continue. Price reverse middle of the big candle at the 15-minute, refine 5-minute zone at 5. Yeah, I can refine those, but it doesn't really make much of a difference, because as you can see, the 5-minute candle is almost the same as the 15-minute. So I just like to keep it as a 15-minute candle. So yeah, that's all about the 5-minute chart. And now it's time to switch to the 1-minute chart. Because as you can see, just taking a look at the 1-minute chart, just take a look at the 1-minute chart, it's a noise, right? It's a whole fucking mess, it's noise. So without combining the proper high time frame knowledge, so for example, the 5-minute and the 15-minute, without combining the 5-minute and the 15-minute knowledge with the lower time frame, then this fucking 1-minute chart will be a fucking noise. And sorry for swearing, but that's your mistake too. But lots of you guys are living on the 1-minute chart only, and only on the 1-minute chart, and you are not switching time frames. You are not caring about the 5-minute. You are not caring about the 15-minute. You're only living your life off on the 1-minute chart. And you can't do that, because you have to know the higher time frame intentions. Because without the higher time frame intentions, this structure, this 1-minute structure, will be just a whole fucking mess. Just look at it. It's literally unreadable without the higher time frame knowledge. But with the higher time frame knowledge, we know that there's a supply zone. We know that there's a supply zone. We know that there's a supply zone. Demand zone. We know that there's a supply zone up here. And these are 5-minute/15-minute zones where we can expect a reaction on. And if price taps these zones, then we can execute really fucking good trades based on these higher time frame zones. But if you only care about the 1-minute chart, you'll see that there's a supply zone, there's a supply zone, there's a supply zone, there's a demand, supply, and you'll be confused, like, where the fuck should I trade? I'm seeing zones everywhere. Where the fuck should I trade? And you'll ask the same question from yourself that I'm just asking from you. And this is your mistake. I mean, not all of your mistakes, but lots of you guys are I'm making this mistake, because you're only living your life on the 1-minute chart and marking every single 1-minute zone, which is a mistake, which can be done, because just look at this. Just look at how many entry opportunities are there. Supply zone, supply zone, supply zone, supply zone, and you'll be confused, like, okay, where the fuck should I put my limit order on? You don't have to predict which zone will hold. You don't have to predict shit. All you have to do is combine this knowledge with the higher time frame knowledge, and you'll see that this whole structure, this whole movement is just a liquidity for the upper area right here. There's a demand zone down here where I can expect a reaction from, and I'll be able to ride the exponential long order flow to the upside, and I won't make mistakes on this supply zone, and I won't set limit orders on these supply zones, because I know the higher time frame intentions are showing me this and this, because I've built a pre-session narrative. And that's why it is important to build a pre-session narrative, because you can actually see what's happening. And if you're not building a pre-session narrative, you'll be just mistaken every single zone by an entry opportunity, and these aren't entry opportunities. These are just messy structures. Is it understandable that why you have to actually create a plan, why you have to actually create a narrative, and why you have to combine the higher time frame knowledge with the lower time frame, and why is it important, and why, for example, personally, me taking 3 to 5 trades on a single week and not on a day, because I'm combining the higher time frame with the lower time frame, and I'm only taking the highest probability setups, and I'm only taking the higher time frame touches or a really good cancellation trade, for example, like liquidity forms for another demand zone here, cancellation, etc., then I'm taking that trade. But mainly I'm trading based off higher time frame, that is on the 5-minute chart. But the latest trades from you, you don't have to wait for a higher time frame chilling markets every single time. I'm not saying this. You have to create your own plan. You have to create your own plan, own personal plan, and not just rely on what I'm doing, because I'm different from you. I'm seeing different setups because we are all learning the same. I'm learning and teaching the same as you're learning from me. That's why you have to create your own plan, because for me, a trade without a higher time frame touch could be a good trade because I'm seeing a good opportunity in it. For you, it might be a bad opportunity, but you don't have to copy every single movement of mine. If I'm trading a lower time frame without a higher time frame touch, that's because that's fitting my criteria, that's fitting my plan. But it might not fit in your plan too. Why you mark at 15-minute zone? What? Why you mark at the 15-minute down, the lowest one candle? That's just what? That's a 1-minute zone. This is a 1-minute zone, but I've explained it. So let me just continue.
Yes, Marcel.
Okay, so let me just continue.
Okay.
1-minute chart. What can we expect from a 1-minute chart? We built a narrative for every single higher time frame. We built a narrative for every single higher time frame. So it's time to build a narrative for the 1-minute chart. Building a narrative for the 1-minute chart is harder than building a narrative for the higher time frame, because building a narrative for the 1-minute chart is actually pretty hard. Not hard, but it's unpredictable. It's much easier to go with the higher time frame flow than just predicting shit on the 1-minute chart, because if you're going with the higher time frame flow, we know that we have several options on the 1-minute chart, and all you have to do is keep the higher time frame options in mind, because you know that there's a demand zone down here. We can expect a reaction on this demand zone, and if the reaction happens, you'll be able to take longs up to this supply. And if this demand fails, then we'll be able to take the shorts to the downside, because supply is in control if the last piece of the demand fails, because that's the last piece of demand, that's the last region of demand. And if the last region of the demand fails, then we'll be able to take shorts, because supply will be fully in control, because the last region of demand has been failed. But if price just reverses here without a good entry opportunity and taps the supply zone, we have another narrative, we have another plan for this, because we know that if this is being tapped, then we can expect a good entry criteria right here, because there's liquidity above this supply zone. Or the good entry criteria doesn't form and this zone is just breaks, then we can expect another good entry criteria right here on this supply zone. And after this, we can write the expectation order flow to the 4-hour supply, demand zone. So we have several options that we formed on the higher time frame. And basically, all you have to do on the 1-minute chart is to follow the higher time frame narrative. If the higher time frame narrative is being played out on the 1-minute chart, then you can execute that. That's all. Let me just read the questions. His question was why the last 15-minute demand has no inefficiency, or okay. So yeah, guys. Yes. No. Did you understand the concepts? Did you understand what I was talking about? Could you actually follow the narrative? Will you be able to follow the narrative in the live trading session too? So mainly yes. Thank you guys. But I'm not really understanding this question, that why is that 15-minute demand zone is valuable? What 15-minute demand zone are you talking about? Right now, we are on the 15-minute chart. These zones are 1-minute zones. What 15-minute zone are you talking about, guys?
Yes, Marcel.
Is there valid long trade right now?
Hello, Marcel.
Wait a minute, please. These are 1-minute zones. This was a 15-minute, not a 15-minute demand zone, but a 15-minute area that started a 15-minute change of character here to the upside. Of course, there will be demand because the trend has changed here. There's an upside push, there will be demand. Supply has lost control right here partly. Of course, there is demand. What was the question?
Yes, I just want to ask you, Marcel, when should we?
If you are going to ask the question that you raised in the chat, then
1 minute
please-
change of character, and when should we wait, and when should we not wait 1 minute change of character? Because of I see trades that you are taking without waiting a change of character in 1 minute, and some trades you are waiting for 1 minute.
let me guess something. Have you finished the whole video course yet, or the whole webinars?
Yes, yes, brother. Even I finished the trade.
Every single webinar, every single video course video?
Yes, yes, for sure.
Then I don't really understand the question, because it has been explained in everywhere that sometimes you wait for a confirmation, sometimes you don't wait for a confirmation. If supply is in control, you can trade demand because supply is in control. If demand is in control, then you can trade demands without a confirmation because demand is in control. But once supply is in control, you have to wait for a confirmation to actually trade demand. But these are literally being explained in the webinars. I'm doing this in the webinars, I'm doing this in the recap videos, I'm explaining everything.
Okay, thank you, brother. God bless you.
Marcel, I have a question.
Yeah.
You see at 15 minutes, please go to the 15 chart.
Sorry, I can't understand you because your mic is just a little bad quality and I can't hear your voice.
Go to the 50-minute chart.
Repeat it, please.
I said, please go to the 50-minute chart.
Write it down, please. I can't hear you.
Switch to 15 minutes.
Oh, okay. Yeah.
Marcel, here you can see a price reverse with nowhere and change character to the upside. Is this a valid change of character?
This is just a change of character in the middle of nowhere. So this isn't a valuable change of character, but this has been taught in the webinars too, that this isn't a valuable change of character, but we can still expect a reaction on this because this could be a pullback, because usually a pullback happens in the middle of nowhere. If it's creating a downtrend, this pullback right here will happen in the middle of nowhere, right? This pullback will happen in the middle of nowhere without a proper demand tap. And the same thing is happening right here. Downside, upside, downside, downside, could be a potential upside movement. Downside movement could be a potential upside movement. Downside movement could be a potential upside movement. And that's what's happening right here.
Thank you.
You're welcome. Let me just check the news. Okay, there won't be any high impact news today. Yeah, there could have been a demand touch on the 1 minute chart. So this could be reacting on a demand zone somewhere around here. But yeah, this is still a pullback of a bearish trend. A bearish trend has started from the upper region. So don't be mistaken. Don't mistake these structural things, because as you can see, supply is highly in control now because price is reacting on this supply zone, created a change of character and the change of character. Oh my fucking God. What the fuck is this? Sorry for my language.
Aliens are here.
Oh my God. So supply is highly in control because price has tapped the supply zone here, which has caused a change of character here and a strong change of character here to the downside, and also broke the last recent 15 minutes flip zone, which means supply is highly in control. It's literally fully in control, and you can expect short trades. So basically taking long trades up to the supply zone is counter trend movement. The highest probability trades are waiting for short trades, waiting for supply confirmations, waiting for the top of this supply zone, waiting for a top of this supply zone, or waiting for a new supply zone to form and waiting for a top of that supply zone, and executing short trades. These are the highest probability setups. That's why I said that you have to understand the higher time frame. You can't just live on the 1 minute chart. You have to know which time frame is in control. I mean, what's in control on which time frame? Because on the 50-minute chart, supply is clearly in control. As you can see, supply tap, change of character, demand break. Supply is clearly in control. You can't just trade on the 1 minute chart without knowing the higher time frame, because you'll be lost. That's what I said. you have to wait for a tap of the supply zone. If you want to execute a high probability trade, you have to wait for a tap of the supply zone, change of character, continuation to the downside. These are the high probability trades. My ear actually hurts. Okay, guys. Chilling markets. How many times do I have to say this? Literally, I just said it 3 times right now. That bullish trades are being counter-trend trades right now. Supply is fully in control. Supply tap, change of character, strong change of character, demand break. Of course, demand trades are counter-trend trades right now. Okay, guys. I hope it was understandable for you, and I hope everything is clear, because the session has opened. Your session is live now. So that's it for today. I hope it was enjoyable for you. So please let me know what you think about this session in the chat. Let me know if it was helpful or just what you think about the overall session, please. And yeah, thank you guys for being here. Wish you all a beautiful session. Wish you all a beautiful rest of your day. And yeah, let's get the session together. I will send the markup updates and send every single needed material for you in order to trade well. And please let me know what you think about this session in the chat right now. One more thing is, if price creates a change of character right here to the upside, or even right here, that will be a strong change of character on the 1-minute chart, and you'll be able to target this supply zone up here. But you need a strong change of character because it's a counter-trend trade, as you remember. So yeah, guys, thank you once again. See you in the session.